Hello and welcome to Big Deal. I'm Nisha Poddar. Now, equity market at record levels, and that has really provided a window of opportunity to fundraise while interest rates have gone up. And a more prominent theme of promoter-investor share sales has also played out, especially in the last few weeks. So looking at the numbers, over 1,03,000 odd crore rupees worth of blocks have really hit the market this calendar year. And out of that, half is on account of the promoter-investor share sales. As the market momentum really continues, let's delve further into the deal trends emerging in the market. And let me welcome on the show is Balasubramanian, MD, as well as the CEO of Aditya, Birla, Sun Life AMC, and Chirag Negandhi, who's sitting here with me in the studio, who's the joint MD and co-CEO of Axis Capital. Gentlemen, so good to have you on CNBC TV18. Now, Bala, starting with you, of course, markets have touched record highs. How sustainable are the market levels currently in your view?
Yeah, I think, Nisha, clearly, as you rightly put it in the beginning, your opening remark, that a lot of deals have happened and they all got picked up. It all reflects the increased appetite, one, towards India, and second, the positivity which has been going in the market in terms of part in the equity market is something is also reflecting. And third is, I think India in general has been a market which is being looked up to by global investors in comparison with other emerging markets. Therefore, also sees that flows are coming in. My own belief is while the equity market has been doing well, the way I see is compared to the last number of years, I don't see any kind of euphoria in the market, which itself means that the overall buoyancy could continue. And second, in general, the banking industry's credit growth has been affecting on a quarter-on-quarter basis. It also means the active levels are showing an improvement. Therefore, earnings-led growth for the country as a whole for companies also should sustain. And last but not the least, despite interest rates being hiked in India, the cost of capital for companies have not gone up in line with the increase in interest rates, which also means that as long as the cost of capital remains somewhat under control, then naturally it's actually more favorable for equity market. All put together, I see that overall momentum in the market, buoyancy should continue. Of course, as we have seen in the past, market goes through some bit of flat period. Therefore, one has to just live with that. But otherwise, I think as it stands today, I think the buoyancy should continue as we move forward.
All right. So biggest takeaway from you, Bala, is that the market buoyancy is likely to really continue. And that is one thing that gives a lot of comfort to deal makers like yourself, Chirag. But it was, whatever said and done, an unexpected equity market window that was really provided. And especially private equity players really capitalized on that by selling in a lot of blocks. A lot of share sale has happened. What was the key reason behind it? In your view, how has this deal trend really shaped up?
Thanks, Nisha. So totally agree. It was totally unexpected.
Yes.
We actually thought India allocations would go up for some of the foreign investors at the start of the year itself.
Yes.
We didn't see that in the Jan to March period, maybe because of global volatility, things that were happening here, etc.
Yes.
But in the first quarter of the financial year, you clearly saw that shift happening.
Yes.
Money started coming in. The quality of deals that we saw was significantly better. Valuations were very attractive. PE investors or promoters clearly saw this as a window.
Yes.
They had a 3-month lull. There is the outlook that an election year, upcoming election year, plus global volatility continuing, could provide a shorter window in their mind, and therefore they've used this window to get out of it, to monetize some of this. But I agree completely with Bala. I think it's too early to call the top here. There's a lot of momentum. There is enough in these markets, to our mind, to believe that we are still at the start of a super cycle.
All right. So start of a super cycle, you are saying. But Bala, if I can ask you about the valuations, you have been an investor first and later part of a listed company, right? So wearing the investor hat, What do you think about the valuations at the current moment? Do you think that, the FII inflows and the exuberance towards India has been one of the prime reasons of this run-up? And the sales that have really taken place, captured especially by the foreign investors more than the domestic investors, that's one of the reasons.
I think clearly the valuation is a function of the earnings growth and expectation that we set in, and various other macro factors also actually support the overall valuations. I think if you look at as it stands today, the expected growth rate for India on the GDP level is somewhere close to about 7.5%. As I mentioned, cost of capital remains somewhere under control. And the whole ecosystem, if you go by the tax collection number, has been showing an uptick on a month-on-month basis. Second is, if you look at the forex reserves, the country has been going up. I think first time ever we are seeing the balance of payment coming more or less close to positives. All this actually look at combined with the macro factor on one side, and second, various activities that is being undertaken to drive the next level of growth, and of course the earnings that is coming in along the way. I think if you look at all the three combinations, I think that seems to be still favorable for equity investors. Again, if you look at the valuation on the base of the March quarter numbers that's been reported by most of the companies, even the valuation is, for a change, is trading at about long-term average PE valuation, which is not actually too out of the radar kind of things. Therefore, there also something which is not coming. As an investor, that comfort, of course, is there. Again, the last but not the least, I think the drive that is being given towards improving the manufacturing sector in India and also digital India, I think there's got a lot of impact on the whole ecosystem for it to get the benefit. That's what I think we are seeing. Even the recent IPO that is coming in, they are priced properly, and therefore the appetite is good. And the existing companies, there is a element of interest is alive. Given the fact that the expected growth momentum from these companies also is reasonable. I think if you go with that principles, I think as an investors, it's something doesn't make us feel worried.
Yes.
At the same time, wherever this excess happens, I think at this point of time, market seems to also being adjusted from the point of view of going through a flat period of growth that we have seen in many sectors. Wherever the sector growth is not there, mediocre growth, market, of course, even investors like us do take some profit on the table, and therefore the risk is also being protected. I think that's the way I see it at this point of time. Definitely, I think one of the areas where I see bigger benefit coming for India is the among the emerging markets allocation that comes in when it increases. Though I think there has been an expected increase in China as a country in terms of flows, but I think the large comfort is coming for India, where the macro factors are more favorable for India as an economy compared to any other economy in the world, including the recent oil prices being quite stable and food prices remaining stable. So naturally, of course, benefits India on multiple ways. I think the worry that used to have a twin deficit today is no more a twin deficit an issue. I think every deficit now being have been addressed, and we are already seeing the result of that in terms of positive numbers throwing up from each of these segments.
Right. So many takeaways, Bala, especially the segregation of, the valuation dynamics between the pockets which are performing well and which are not. And the second that he mentioned about the IPO, they have been more attractively valued. Now, Chirag, you've worked on so many IPOs. Last time we had a very good season of IPOs last year, but then this year was anemic till last month. So what was the texture of the IPOs? We saw some very interesting names come up, and that's why the run-up in the stock price on the debut had also been good, like the types of Idea Forge. Yeah. So how were the IPO appetite in the minds of the investors from your point of view?
So again, like Bala said, Nisha, you had a lull phase, yes. And what you had after that is companies, great companies, good business models, good governance standards, backed by some of the PE investors or marquee promoters coming to market, wanting to do so at reasonable valuations, which is where the upside for the investors came in. And this is very typical of a IPO market or any market that actually starts off after a lull. The first few have to be priced by default at attractive levels that investors will make money. So, you spoke about Idea Forge. We just did Cyient, which listed 2 days back.
Yes.
Great returns on listing itself. Mankind, which was a large 4,000 odd crore deal, is up 80% almost in the last couple of months. Nexus REIT, a mall REIT, has done really well. It's a REIT. It should be a yield investment, but it's done really well in terms of the capital value appreciation as well. So, 5 IPOs that have happened from April, all of them that have done well. And that, to my mind, is only now starting off a cycle of many more that will come to market.
Yes.
But again, I don't expect it to be like a 2021 where everything was every deal was happening.
Yes, yes.
Investors have clearly been more selective, both in terms of quality of the management and the business,
yes,
as well as on valuations. And I think that'll continue.
That's right. It's a very important point because not every paper has buyers in the market right now, despite the valuations being high and also market appetite being there, especially from the foreign investors. All right, Chirag, Bala, hold your thoughts. We have lots more to discuss on this topic right after a very short break on Big Deal. Stay tuned. And how much time we have? 10 more. Okay, fine. Bala?
Yes.
So I'll ask you now, there is a strong pipeline of IPOs still. What are you expecting as an investor? What are the factors which will make you invest in them?
Sure.
Yeah, and second, I'll ask you sectors. We haven't spoken about sectors. So what is your view on which sectors? Because see, now we have seen IT. TCS has gone in a different way. HCL Tech has performed differently. Federal Bank has also seen a decline in asset quality. So, from the present earnings, you want to take up the market trajectory going forward, your outlook? But you already made. Welcome back. You're watching Big Deal and we are discussing the equity market deals while the markets are at record levels. Now, Chirag, we were discussing about the IPOs and there is a strong pipeline, you said. So that's one important takeaway, that there are many more aspirants. But in terms of deal trends, now that the backlog of a lot of private equity, exits as well as sale of shares that has really taken place in the last month and a half, what is the deal trend that is really picking to capitalize on this market window?
So, Nisha, what we've seen so far is really blocks, QIPs starting out. Blocks, quite a few of them have happened.
Yes.
On the IPO side, there have only been 5.
Yes.
So that trend is something that I believe now you'll see a lot more of. Again, I don't believe it'll be like the 2021, where in December alone, we alone had done 9 deals.
Yes.
So not frothy times there. Good companies, good valuations will find buyers. There is a lot of interest. And across sectors, whether it's cap goods engineering, whether it's healthcare,
right,
whether it is BFSI,
right,
there are a lot of companies that have got their clearances from SEBI.
Yes.
They're waiting to, to come to market.
Yes.
And I think a lot of them will now find investors that will see value there.
Right.
But I don't think that we're anywhere close to this being a hyper bull market in that sense, or that, there's too much deal activity or any of that.
Yes.
I actually think that the returns that investors have made over the last 3 months, especially in these primary market deals, will bring them into the new deals as well.
All right. So a lot more, and interesting the sectors that you mentioned, and nowhere the tech startup space is getting a place in the IPO pipeline, it looks like. But let's ask Bala. Bala, as an investor, what is the kind of IPOs and what are the factors on which you will base your judgment to invest in an IPO going forward?
I think clearly there are 2 parts. One, the existing well-established business model, particularly in the private space, now coming to the market for going for listing, and also fund the future to the capital raising, as well as even exit to private equity who would have built these businesses in the early part of their things. Now they want to go for the public, therefore buyout divestment. This is all coming from the existing established by the balance sheet and business track record, and on the basis of which expected growth that could come on a company, especially it's coming in the EV space, it's coming in the automobile space, it's even coming in the IT product side also.
Yes.
And that's something you can look at it more from the point of view of one, such kind of companies, when it comes to listed space, given the tracker about the management and the valuations and the future the potential of the companies, that's one. Second, as far as the startup companies concerned, there are 2 types of startup. One, of course, the startup, which is more on the service side, which is what we see in the last few years, last few months. We have seen some bit of slowness in terms of IPOs of those kind of companies. But the startup companies more in the manufacturing side. The drone manufacturing companies got some kind of good appeal because the business model is good, something new. Something is actually more the manufacturing sector. Scalable is very, very high. Usage rates can go up quite significantly. That's something unique. I think that's one segment of the market. So we call it as a startup, but the fact of the matter is they are in the thick of the manufacturing space. That's something, again, we as a fund house pay attention to them. Another factor of the matter is, I think the combination of both, and ultimately, I think one of the big things that has come in the last 4 or 5 months, post last year, November, when the IPOs picked out with the new age companies coming into the market, clearly the valuations have become more reasonable, and wherever the valuations are not priced or set properly, we also see the interest rate levels from mutual funds also is low. And that's why I think the market itself get adjusted for the demand supply in terms of setting the valuations right.
That's right, Bala. In fact, kudos to the domestic institutional investors like yourself who did not even buy into the last 2021 frenzy of, the startup IPOs, while the foreign investors had pumped in money. And now it looks like sanity has prevailed on the foreign investors as well. So there are no takers at insane valuations, and those have really come down. That could be a point of worry as well. But Chirag, in terms of sectoral play you have mentioned, but going forward, in terms of investor sentiment from the road shows that you're having, is the foreign inflow continuing to be as robust as we have seen in the recent past?
Absolutely. Just to address, just to touch on some of the points that you made earlier, there was clearly a scenario where there was froth in some of the valuations of the new age companies.
Yes.
A lot of that froth, investors are now acknowledging, has been cleansed. And you're already seeing interest coming back into those spaces. So I wouldn't completely rule out that you will see some new age service company that actually comes to market over the next 6 to 9 months, albeit at much more reasonable valuations. Again, it won't be every company that's trying to come to market. a few good ones with a real service or product, we're at reasonable valuations. We'll see the light of day.
Yeah.
In terms of investor sentiment, very, very clearly, India is the beacon of hope in that sense.
Very few markets are giving the kind of potential, showing the kind of promising potential that India is right
Absolutely.
now. And
I mean, you look at all the macro factors here,
yes,
including on the interest rates. It seems like we're as close to the peak. And that itself is good enough for the investors where, if it's the rate of change that they buy into and that's what moves things for them.
Yeah.
So if the sense is that we are close to the peak or that, the trend from here is either flattish or downwards,
yes,
that's good enough for investors to start looking at markets like India, where we have a 7% growth.
Right.
And other macro factors also align for us.
Right. But I would say that even though both of you are sounding extremely bullish because the business is just going so well, right? But Bala, I would say the markets have defied a lot of macroeconomic data, geopolitical aspects, as well as oil prices, which affect India a lot. It has really defied a lot of these factors just because money has been coming in. The inflows have been very strong, stronger than the domestic institutional investors. So my question is, what are we baking in? Do you see a froth? And how do you see the interest rate trajectory as well as the election season being kick-started impacting the markets going forward?
Sure. I think if you look at Nisha on the interest rate front, I think looks like we are more or less the peak of the interest rate hike cycle. Though there is an expectation which got built in the last few days, US probably will go for a final rate hike, and after that they will leave it for some time. So the way I see is the current interest rates will stay for longer. It's at least about 6 to 8 months of period this financial year, this calendar year. And probably have to start looking at cutting rates the next year if the inflation comes close to about 2% as far as US target concerns. From India point of view, as we start seeing the narrowing of interest rates somewhat come closer to the previous period, then India probably will start looking cutting rates. But India probably the rates in our belief is will stay for longer. One of the good things that has happened from India is actually the debt equity ratio of Indian companies, of Nifty 50 companies, one of the lowest. And then the borrowing to the debt markets have become relatively cheaper for companies to fund the growth. Therefore, interest rate-led impact on Indian companies for their balance sheet point of view or profit point of view, I think is the least from an negative impact point of view. I think that's coming handy from the equity market to sustain. Second, from the headwind point of view, I think if one looks at more deeply, while sectors, of course, rotation happens in the market, as we have seen the last 1 year, IT companies are not done well for a variety of reasons, whereas automobiles are actually done one of the best in the last 1 year. I think we see these kind of sectoral rotations happening. Our own belief is banking, automobiles, capital goods sectors, including power sectors should continue to do well, or transit should continue to do well. At the same time, there is also another macro factor which is driving the commodity prices coming down, especially steel, aluminum, some of the other commodity prices coming down globally. All the input industries will also start seeing the benefit. We are also seeing some benefit getting accrued to the housing material companies. They are seeing some kind of benefit coming in. Cement companies are seeing some kind of benefit coming in with the coal prices coming down. I think the dynamics, of course, keep changing it. I think that's why I think one has to just keep in mind, rather than sticking to one, one has to, of course, keep a very close eye on some bit of sectoral rotation that also will have to be looked at from the money manager's point of view.
Right. All right, Bala. Thanks so much for your insights there. Thanks so much, Chirag, for stepping by and also sharing all your thoughts. And of course, the deal flow is looking strong at this point. And I would just say one thing, that the overall understanding is that the investors are a lot more choosy and a lot more selective at this point, and any paper will not have a calling in the market, and that's a good sign of mature market. With that, it's a wrap on this edition of Big Deal. Thank you so much for tuning in.